Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, KG, it seems like the headlines, the back and forth between the U.S. and Iran are front and center right now, and it looks like we're once again risk off. What's your take as you look broad strokes across the market?
Yeah, we are now seeing selling pressure when it comes to the even the S&P 500 down about almost 1% at this point in time here. Now, yesterday we actually had a little bit of a rally that took place. We had maybe a little bit of a dead cat bounce, and that was on the optimism that maybe a deal could be struck. But once again, we kind of talked about this over the last couple of days. There's a lot of talking coming from the U.S. regarding the ceasefire talk, but we have not gotten that actually confirmed by Iran. Now, this morning, it seems like President Trump is taking a little bit more of a harder tone against Iran, and that is also that's also fueling this move to the downside for equities. The dollar is moving up, yields are moving higher, as well as the oil market and the energy market as a whole starting to gain a little bit of traction here. If you're actually looking at the Brent crude contract, we are above the $100 level at this point in time, trading at about 107.5, and you continue to see a significant bid there. I think one of the things just to kind of focus on here, Diane, is that the East Asia markets are really feeling the impact. If you look at some of these countries like the Philippines, it seems like they are really kind of instituting what we saw back in COVID-19 when it comes to the rationing of energy, as well as advising individuals to stay home if they possibly can and reduce their electricity consumption. In Thailand yesterday, what was actually very interesting is that they're basically their equivalent of regular gasoline here in the United States increased by 14.5%, more than that actually, on an intraday basis. So in the morning, it moved up, and then obviously during the middle of the day moved up 14.5%. That's kind of unprecedented. So we are seeing an energy crisis taking place here. And I think the market is now kind of figuring that out. There's also this risk that we are kind of delaying potentially, the effect in order to get troops in the region. It seems like the market is also once again pricing that in, that maybe we will see boots on the ground in one way, shape, or form. And that's creating a lot of this volatility. So a lot of uncertainty in this market here. You got to keep your head on the swivel. But the enthusiasm that we saw yesterday is obviously being wiped out this morning. And if this trend does continue, you start looking at, once again, around that 6,500 level for the S&P 500 as your critical area of support to be able to try to hold.
Let's talk a little bit more about where oil sits right now. Of course, there's also the ratcheting up of rhetoric and possible boots on the ground that causing more gyrations in oil markets. You also have reports from Iranian state media that they're looking to charge what it looks like essentially a toll to pass through the Strait of Hormuz. Yeah. Tell us the latest there.
So Iran is looking at actually formalizing a toll to get through the Strait of Hormuz. We know that there has been chatter that this is already being completed and done. There's been reports that it's around $2 million in order to pass through the strait at this point in time. And if you're looking at some of the 5 points that they actually responded to when it came to this ceasefire proposal, Iran wants to actually have it stated on the international stage that they are in control of the Strait of Hormuz. Once again, that's going to be a very big hurdle for the international markets to be able to overcome and actually recognize, which is once again another reason why we are seeing a lot of this movement of this reaction within the oil markets. Diane, I think the bigger risk that you have right now, obviously it's still going to be striking oil infrastructure, energy infrastructure, but you also have the potential for the Bab el-Mandeb Strait to come into effect here. Now that's going to be impacting the Red Sea. Remember about a year and a half ago or so, we had this disruption. We had the Houthis hitting a lot of tankers and carriers within that region. That also could come into effect. And if so, that's around 10% to close to 12% of global oil flows on top of what we are seeing with the Strait of Hormuz. That's where you get additional premium when it comes to the oil markets right now. So it doesn't seem like, based on the rhetoric from Iran, that this is going in the right direction. And I think the market is really kind of, figuring that out at this point in time. I know that we've seen a lot of jawboning from the administration in order to push prices down. But if you look at the price action, it's really not having that much of an effect. I think the market really wants to see a ceasefire taking place here in order to back off some of these higher energy prices and really kind of normalize the curve. Right now on the commodity front, it looks like we're going to be in this conflict for longer than what we initially expected.
Yeah, listen, we're in day 27. Yeah, we're in day 27 right now, so heading quickly towards about a month into this war. Let's talk about what's going on with the metals, miners. Seeing gold take a step back, Newmont mining under pressure, Freeport-McMoRan down as well. Freeport-McMoRan down 3.5%. Walk us through what's at stake here.